What is going on YouTube? It's your boy Dollar Mike and I'm back at it again with another video. In today's video, we're going to be talking about a stock that typically a lot of dividend investors actually talk about here on YouTube. So I'm sure you've seen other videos from other YouTubers making videos talking about this particular stock. And this particular stock I am selling today, or pretty much over the next couple of weeks, to go ahead and pick up something else. And that stock is ticker symbol QYLD. If you haven't seen some of my videos before, I pretty much make videos covering personal finance topics. That means saving your money, investing your money, budgeting, credit cards, cryptocurrency, all that kind of good stuff. And I also go over pretty much my investing journey here on YouTube as well. So I talk about my full-blown dividend and growth portfolio when it comes to Robinhood and some of my other portfolios as well that pretty much aren't as fun. In this particular video, we're talking about my Robinhood portfolio, and we're talking about a large position in that portfolio, which is QYLD, and why I will be selling it to go ahead and pick up something else. So let's talk about that. Let's jump right into the video. Let's get started. Let's go. Now, QYLD as a stock is actually extremely popular, especially popular with dividend investors because on average you're receiving about a 12% dividend yield right now, and I've seen dividend yields from QYLD from me being invested in it personally of around 15% and sometimes even higher than that, maybe for one single month throughout the year. So you're definitely going to get a lot of dividend income from QYLD, and this is a monthly dividend, so you're going to get that passive income from QYLD every single month. Solid reason, for a lot of dividend investors to like a stock like this. But on top of that, we need to understand what exactly QYLD is in order to understand how much of an investment it may be or how safe of an investment it may be for the long term. Now, if you go and type in QYLD here on YouTube, there'll be tons of videos, a different mixture of videos, pretty much going over how amazing QYLD is as a stock, as a dividend stock and dividend income, and also how terrible of a stock QYLD is pretty much for the same exact reason because of how much risk you take with having that type of pretty much investment in your portfolio for the long term. So I think honestly, after being invested in QYLD for a little bit over a year and a half now, I'm somewhere in the middle, but I'll give you my 2 cents on that right here. QYLD is a covered call ETF on the stock market, and they do covered calls on the NASDAQ 100. So any stocks that may fall under the NASDAQ 100, you can bet QYLD is probably doing some covered calls on them to make themselves some extra income. And if you guys don't know what a covered call is, pretty much a covered call is essentially betting, this is what QYLD does, they're essentially betting that the stock price of a stock will not move too much in the near term. It might not go up too much. It might not go down too much. It'll stay in a relative range. So if that stock does stay in that relative range, then QYLD would make money by simply selling covered calls on that particular underlying asset, which would be one of the stocks under the NASDAQ 100 umbrella. So for example, doing a covered call strategy on a stock like Verizon, where the stock price doesn't really fluctuate too much over time, might be an extremely lucrative way to make some money when it comes to just having an extra amount of income come back to you from selling those covered calls on Verizon versus just holding the underlying stock and just waiting for Verizon to either go up or down and you either make money or lose money just doing that. Having that 100 shares to go ahead and do a covered call strategy will simply make you a little bit extra money if everything comes out right and if the premiums are actually worth something. So that's just one example, and QYLD actually does that with multiple stocks under the NASDAQ 100 multiple times a month to process or generate pretty much passive income for you as an investor in QYLD, so you can get that monthly paying dividend that we like around 12-15%, depending on what's going on in the world right now, pretty much. As I mentioned before, my Robinhood portfolio is a dividend and growth portfolio, so I'm focused on picking dividend stocks and growth stocks to overall just better myself and just have fun on this investing journey and take a little bit more risk than my other portfolios where they're pretty boring. I'm pretty invested into just regular ETFs that normally I'll just put money into, don't think about, and just go about my day as time goes on. So to me, QYLD actually fit my portfolio back when I originally invested into it January of 2021. Pretty much I was looking for something that offered a little bit of risk, that offered a high dividend yield, but also I could make some more money to put back into other stocks, not pretty much reinvest into QYLD. So pretty much all the passive income that I receive from QYLD goes into other stocks in my portfolio, and I simply plan to build those stocks out going forward. And honestly, I still believe that QYLD is an excellent investment for something just like that. If someone has a lot of money to go ahead and park somewhere and they want to make a lot of passive income from it across pretty much monthly on top of that passive income, making about a 15% yield on that passive income, I think QYLD is a great place to park your money for a short amount of time, not for a long amount of time, because long term QYLD stock price will likely go down and the dividend yield will likely get slightly lower with every given year versus investing into a regular stock where most likely the share price is going to go up and the dividend yield will go up as well depending on what type of stock you're invested in. So I was looking for something on those lines that offered that would still give me a little bit more risk than just a regular stock like Apple or Microsoft. And I think I found one of those stocks thanks to you guys. So thank you very much for that. And we'll get into that in a second. Since QYLD sells these covered calls at the money, any possible profit above the money, you simply won't receive when you invest in QYLD versus investing into the entire stock market or versus investing into that particular underlying asset that's running up greatly. So if the market decides to rally tomorrow, in the next 3 months, in the next year, pretty much QYLD will have a very limited upside because they're going to cap themselves out by only selling at the money calls instead of selling well above it, which we just won't receive the profits for if you're invested into QYLD. And that's in the case of a bull market. In a bear market, QYLD's underlying assets would obviously be lower, and if they're lower, then QYLD's stock price will be lower, so you're losing money on that end. On top of losing money on that end, you'll probably lose a little bit of dividend income because they might not be making as much money, so that's the idea as well, so you might not make as much there. And on top of that, if it was pretty even where the market was just kind of stagnant, going slightly up and down every couple of months, not really changing in price, then those option premium prices will likely be cheaper going forward because people as investors would not be willing to pay as much, especially if the market is stagnant. So all in all, QYLD is an okay investment. I think it's pretty solid. It's not terrible, but it's not what I'm looking for as a long-term growth and dividend investor in my particular portfolio. Do I think it's still solid? Yes. Do I think it still has a place in the market? Definitely. Do I think you should still buy it? Personally, up to you. Do your own research. So with all that being said, my replacement, something a little bit different for QYLD, is ticker symbol JEPI or JEPI. And shout out to James Feth for letting me know about that and pretty much let me know that it exists, it's out there, and I did my own research, and this is my conclusion. This is what I come to. So this is what I'm going to do for my particular portfolio. Like I said before, you can be completely different. It's your own thing. Do your own thing. Do your own research, all the good stuff you need to know. But let's talk about JEPI real quick. So JEPI stands for JP Morgan Equity Premium Income. It's sitting at about $55.33 a share right now. And overall, this will offer me a smaller dividend yield of around about 8%. That's what it's averaging right now. This could go up or go down in the future. Obviously, dividends are variable across all these type of different income derivative type of stocks, but overall it's averaging about 8% right now. On top of that, it's a lower expense ratio for JEPI versus QYLD, so it's almost about half. Right now, QYLD's expense ratio is about 0.60%, which I think is a little bit high, but I mean, it's respectable for what it is. Most of them are around that same point. And then when it comes to JEPI, it's about 0.35% dividend yield. So about half of QYLD, so automatically I'm saving money right there, especially if you have a lot of money to invest into it, but you're also not making as much money in dividend because of the smaller dividend yield compared to QYLD. Lastly, JEPI has a goal to provide limited downside compared to the S&P 500 when it comes to losses, and also you can still make money on the share price growth going up long term because it's going to track the S&P 500 and those underlying stocks that's in that particular fund. So we already know that QYLD does covered calls on the stock market to overall make that investment income every single month to pay us a monthly paying dividend. JEPI does the same exact thing. They also do covered calls on the stock market on the S&P 500 instead of the NASDAQ 100. They do covered calls on the S&P 500. On top of that, they invest in underlying assets in the S&P 500, like Microsoft, like Apple, some of those big name companies in there. On top of that, the main difference is they invest into ELNs or equity linked notes. An equity linked note, say that 5 times fast, or ELN, is a debt instrument, usually a bond that overall tracks an underlying asset, which could be a stock, a basket of stocks, or another equity index. So pretty much JEPI or JP Morgan uses these ELNs from counterparties, banks, broker dealers, and other affiliates to protect your investment when it comes to the downside while still having everything invested into those stocks as well, so you can make gains on the upside and have the stock price go up on top of you receiving a solid high paying dividend yield every single month. And we can see exactly that over the first half of 2022, where JEPI actually lost significantly less than the overall S&P 500 as a whole. So overall, they did protect your investment on the downside. Now let's see what they can do on the upside going forward in the market. That's what I'm waiting to see, and I'll show some comparisons right here. So right here, I actually have Seeking Alpha loaded on up. This is a website where you can go ahead and do a whole bunch of stuff with when it comes to your investing journey. So if you're interested in stuff like that, make sure you check out my link down below because they are a brand new channel partner. Like I said, Seeking Alpha offers tons of different things. You can put your portfolios on here to see the latest news. You can see top stock picks and so much more, and I'll talk about it continuously as these videos go on because it's a lot they have to offer. But one of my favorite features on here is actually the comparison stock tool. So we're actually going to go up and check that out right now. I'm going to go over to premium, go over to compare stocks and funds, and I actually already have it loaded up for you guys. So right here, you can see I have JEPI versus. Pretty much, I'm going to click on that. I already made this. I just made it like 5 minutes ago where I can just compare 3 different stocks. So what I want to do is I want to compare JEPI to QYLD and also to the entire stock market as a whole, or at least the S&P 500 part of it. So right here we got JEPI. We have ticker symbol SPY or SPY or the S&P 500, and we also have QYLD. They have different types of ratings and everything that they go about to overall give each stock a grade and each particular part of a stock a grade, so you can pick the overall make the best investment choice when it comes to you. Now, you can take all that with a grain of salt, do whatever you want to do with it. We're not really here for that particular information right now, but it is available to you. So if you want to go ahead and sign up, definitely do that. My link will be down below. You'll get $40 off a premium membership. What we're actually here for though is the dividend. So right now you can see right here the dividend yield for JEPI is about 9.34%. For the S&P 500 is about 1.5%, and for QYLD is roughly about 15%. Great. So like I said, I still do plan to switch over to JEPI, but we're not looking at just that. We're really focused on the downside right now. So JEPI hasn't been around for that long. The inception of the stock, or the fund, I guess you could say, was actually on May 20th of 2020. So it's pretty fairly new into the stock market. They already accumulated over $3 billion in assets under management, which is crazy, I think, personally, considering it just appeared on the market just a couple of years ago versus something like QYLD, which is sitting at about 5.7 billion. But besides the point, it doesn't matter in that sense. We're going down. We're going to scroll down here and see the dividends. Like I said before, those are 3 different dividend points. But what I really want to see is the performance. So I really want to look at the performance when it comes to JEPI compared to the SPY. And then you can also look at QYLD. You can see for 1 month, it's beating the SPY, or you took a lot less loss by investing in JEPI versus investing into the S&P 500. 3 months, same exact thing. 6 months, same exact thing. 9 months, same exact thing. 12 months, right here, same exact thing, which is 1 year performance. And the year to date, which is of course this year 2022, same exact thing. The S&P 500 went down roughly 19.7%, and JEPI only went down roughly 12.17%. So overall, they're sticking to their guns. They're limiting their downside. Now, when it comes to the upside, you won't receive as much upside as you will receive with the SPY, but that's completely understandable. You're not here to invest to make money from the S&P 500 companies. If you want to make money and gains from S&P 500 companies, you go and invest in those S&P 500 companies, or you just simply buy the SPY. What you're here for is the quality of that dividend payment that you're going to receive every single month. That is a high dividend yield. You can see the SPY only offers a 1.5% dividend yield, 1.58, while JEPI and QYLD offer both higher dividend yields. So we're here for that. We're here for the income to go ahead and do whatever we want to do with. And that's pretty much it. So if we scroll back on down, you can see, like I said before, we can't see 3, 5, or 10-year performance on JEPI because it hasn't been out that long. This year, I believe, will be the 3rd year. So we'll see what the numbers are looking like after about 3 years. But QYLD, if we compare it to the SPY, it's almost always worse than the SPY in every single metric so far, even the long-term metrics. So as a long-term investment, for me personally, as someone that likes to hold onto stocks long-term, regardless of what's going on, I would rather be invested into something like JEPI, where we'll wait and see what the overall long term is going to look like. But for sure, we're definitely limiting our downside when it comes to JEPI versus QYLD. And for that reason alone, I think I'm going to stick with JEPI for the time being. Now, there may be other high yielding ETFs that are way better than JEPI, but from the research I found, I like JEPI the most right now, and this can all change. This is my investing journey, just like it's your investing journey if you want to go on and trade into these stocks or trade into other stocks like it. So that's what we're looking at right now, and you can see some other stuff on the website as well. But overall, that is pretty much it. And like I said before, Seeking Alpha offers tons of different things, tons of different stuff, all for under that premium membership, and I'm telling you, it's worth it. I've had it for about 3 weeks now, and I will continue to have it probably for the rest of my investing journey. It's solid. So either way, that's all I got for JEPI versus SPY versus QYLD, and that's what I wanted to point out to you guys. So there you guys go. That is the quick comparison when it comes to JEPI, the SPY or S&P 500, and QYLD, and also why I'm really looking into getting into JEPI and trying to overall ease my way on out of QYLD. On top of that, if the market actually does decide to go up over the second half of this year, you don't want to be limiting yourself with the potential gains that you could make in investing into something like QYLD. While it may be a solid time to get some because it's at such a low share price right now, I believe it's sitting around $17 a share. Where's my phone? Yeah, it's sitting around about $17 a share. So I think QYLD is solid if you want to go ahead and grab a lot of dividend income and you have a whole nice lump sum of money to go ahead and put in. But overall, past that, I would go with something like JEPI or another stock that you may find on your investing journey. So that's all I really got. You don't want to limit your upside potential when it comes to if the stock market does decide to run for the second half of this year. And QYLD will do just that to you because, like I said, they're going to sell those covered calls at the money. That means if a stock runs way beyond that, they're only going to make a certain amount of money. They're limiting themselves to how much money they can make. So you overall won't receive the most gains when it comes to QYLD, when it comes to the dividend or the share price going up. I think the share price, the most it'll ever go back to is probably about $22 if it even does that. So we'll see. I could be completely wrong. This is my take on my investing journey. This is all me. So I don't need anybody down in the comment section going crazy talking about this is the wrong strategy. Look, let me learn from myself. That's pretty much it though. But that is pretty much it. I don't really have too much. I'm looking at my notes here. I think that's kind of what I'm running for with JEPI, QYLD. Let me know your thoughts. To be completely honest, I would love to hear what you have to say down in the comment section below. There are other dividend ETFs that I could be invested into, just like you could be invested into, I think, JEPQ. I've heard of that. I haven't done any research on that. XYLD, RYLD, QYLD, of course, those are options. So it really depends on your particular strategy, what you're trying to do in the market, and how your time horizon. Are you in this for a couple of months? Maybe QYLD's bet. A couple of months, QYLD, I would 100% recommend it. Couple of years, I might go with something like JEPI. But you simply have to go with what's best for you. But I just want to put it out there because I've been investing to QYLD for over a year and a half now. So I feel like I've gotten the understanding of QYLD, what it does, and I'm looking for something else when it comes to my investing journey. So that's all I got for this video. Thank you guys for watching. I know it's probably a long one, but I did want to try to at least explain this topic as best as I could because it's not the easiest thing to understand, but I think I did an okay job. So let me know that down in the comment section below as well. If you need more clarification, I'll explain myself more down in the comment section as well. And on top of that, like I said before, Seeking Alpha, great website, offers tons of different stuff, and it'll be a link down below. It'll get you $40 off the premium membership. I think it's even more than that right now because they're running a July 4th special. So I'm telling you, just try it out. You'll get a free trial when you try it out. If you like it, cool. If you don't like it, that's fine as well. It's up to you. But I think you'll like it a lot. I think you'll like it. It has a lot of information on there that will help you invest. That's simple. And help you make great choices when it comes to investing. And this is perfect for exactly what I needed it for. Because other than that, I probably would have been doing research on this video for a lot longer. Either way, I'm rambling. That's all I got. Take care of yourselves. Stay safe. Stay positive. Thank you guys for watching. I'm out. Take care of yourselves. I said it again. Dollar Mike. Peace.